Hello, everybody. This is Tim Travis with TNT Capital Management, and today we're going to go over cash secured puts and how they work. These are just the disclosures we have to reveal, so this is really for educational purposes only. So the stock we're going to talk about today is Ally Financial. So this is a bank. It's kind of the old GM Financial. And on March 21st, the company was trading at $26.34 per share. Now, Ally's business is predominantly auto loans, to a lesser extent leases. They're a little over 50% used automobiles now. They're not in the really subprime spectrum like some of the more aggressive lenders. Nearly all of their assets are secured assets, unlike credit cards and things like that. As they expand into other businesses and other areas such as investments and credit cards, that will probably increase in terms of size. But as of now, it's auto loans, and then they've got some mortgages and some commercial finance. They have an insurance business that does quite well. So we like this business a lot. They're a bank, so they have deposit funding. Other auto lenders that have kind of gone bad in the past, they really mostly relied on securitized debt. And so when credit froze up, they would sometimes have problems there. So we like Ally a lot in that it's funded by deposits. So the adjusted tangible book value is $29.90 per share. And so the company's trading at a discount to tangible book. Financials are pretty cheap relative to the overall market. So we like that area. The balance sheet is very strong, Tier 1 capital close to 11%. They're able to return nearly all of their earnings to shareholders via stock buybacks and dividends. So that's very attractive. We think on average the company should earn about 13% on equity. So, at $3.88 per share, this company is trading at around around 6 or 7 times earnings. So it's extremely cheap. And then the normalized earnings yield, which is just really the inverse of the price to earnings ratio, that's 14.73%. So the way to look at that is if Ally were to pay out all of its earnings as a cash dividend to you, the yield would be 14.73%. You compare that with 2.5% for 10-year treasuries right now, and it's pretty attractive. And we think earnings should grow. We think book value should grow. So we think Ally is worth roughly $35 to $40 per share. So if you want to just own the stock, that's reasonable. We certainly own it at this time. But what we like to do is we like owning it and then also selling some puts on it. So let's talk about kind of how we do that. So what we're going to do is we're going to sell one January 2020 expiration $25 put for $215, $2.15 per share. Every option has 100 shares in it. So that's $215 total. Now, when I talk about cash secured puts, I like to make it simple. And so think of it as a coin flip, heads or tails. So assuming you hold that option expiration, really only those two things can happen. So heads, if Ally expires above 25 at expiration in January of next year, you're going to make $215 on your maximum risk of $2,285. We like to annualize that since that gives us a good run rate of what we're looking at, and that's 11.3% annualized. So heads, stocks above 25 at expiration, we make 9.4% on our money. We're happy with that. Tails, if Ally expires below 25, you're going to end up owning the stock at a break even of $22.85. Now, at that price, that's a 13.2% cushion from the current market price of $26.34. So think of a bear market in a stock. They normally define a bear market as 20% lower or more. And so you get a bear market in an Ally stock at 20% down, you're only down 6.8%. So it's a safer strategy than just owning stocks outright. The downside's somewhat limited, but you have that 13.2% cushion, which goes a long way. And what's nice is if you're exercised, you're going to have all of the upside or downside from there. So if you believe in the company like we do in the stock, at 35, which is our target price conservatively, we'd make 53% on that maximum risk, not including the dividend. So heads, we make 9.4%. Tails, we end up owning the stock at a cheaper price. For us, it makes a lot of sense. That concludes our quick presentation on cash secured puts. If you have any more info, don't hesitate to reach out to us directly. We do offer managed accounts and other educational services, and we'll be continuing this video series. Thank you so much.